From our studios in Los Angeles and Tampa, this is Green Tag Theme Park in 30. I'm Philip, and I'm joined, as always, by my co-host Scott Swenson of Scott Swenson Creative Development. On Green Tag, we look at the top news each week, and we try to explain why it matters to business professionals in the themed entertainment space. And this week, we are recapping some of the earnings calls, starting with Six Flags, moving into United Parks, and then we'll just see how far we get.
We're so good at planning. We really
I don't
are.
know that. I know we're going to get to at least these two stories, but we have to cover the Six Flags thing because anytime we make a video that doesn't involve Six Flags, nobody watches it. So
That's true. I think that's true. So this says Six Flags, Six Flags, Six Flags. We'll just throw that out there right at the beginning.
We got to get the SEO in. We got to make sure it's sprinkled throughout the content.
Yes. Did you mention Six Flags? Is this a story about Six Flags, Philip? Let's talk about Six Flags.
Let's talk about it more. So basically, I think the what everyone is just talking about with Six Flags this week is on the earnings call. They basically said that closing or selling more parks is a priority for them. So the Brian, the CFO and VP of Six Flags, expressed that getting the portfolio smaller and more nimble is a priority. He discussed that during the earnings call, which was on November 7th, 2025. I'm just gonna read parts of what he said here. He says, as we look ahead, our roadmap for the underperforming parks centers on two pathways: migrating those parks toward the performance profile of our best parks in the portfolio, or classifying them as non-core and divesting them where it made strategic and financial sense. In a bigger company where we're trying to narrow our focus and shrink our capital needs as well as reduce our risk liability exposure, getting the portfolio smaller and more nimble is a priority. So we're going to look at the parks where our returns are the greatest, where the opportunities for growth are the highest, and we're going to focus on those parks, and the other parks we'll look to monetize and use to reduce debt, basically. He talked about how the DC property and Santa Clara property were good examples of this. So of course, these are the ones that we've talked about ad nauseum that are closing or just closed this past season. Right. He said, we'll continue to look for more opportunities like that where we have excess land, but most of that low-hanging fruit has already been plucked. Such a weird thing to say. There are always assets in the portfolio that we get inbounds from that are core, critical, top performing, and et cetera, et cetera. So I know this made a lot of waves in a lot of places, but to me, I don't know. I actually think this makes perfect sense. And when Six Flags completed the merger, they have a lot of properties, and I think it's pretty clear from the discussions we've had, so many discussions we've had about Six Flags, that the quality, basically what it seems like what everybody in our comments and everybody in all the other previous videos has said is essentially everyone wanted the Six Flags park to be brought to the level of the Cedar Parks, okay? But this is a merger. So it really was never clear to me where the money was going to come from to when in just a complete merger to take those parks and bring them up to the quality. And I think that this makes perfect sense. I also think it's just too many parks to manage. Most of them were Six Flags parks. And so you're trying to convert the majority over to running like the Cedar Fair parks, and then with a focus on entertainment and quality and good food and all of these things. The math was not mathing in just my take, which has been this entire time. So I think them laying it out clearly on this call makes perfect sense. In fact, I know there are going to be people who are upset because if you're by a smaller park and that one
or
does
underperforming park, they don't even have to be a smaller park. They can be a pretty decent sized park. But if they're underperforming, then they're even more of an anchor around the neck of the what is now Six Flags.
That's right. And I know that's, again, going to upset people. But again, it seems like what everybody wants is for them to bring the quality of the park, the Six Flags parks, up to Cedar Fair, and for the Cedar Fair to maintain quality. That seems to be what the consensus of across all the fans is. And so how do you do that without money, and also when you have too many parks to manage? And I think this is the answer.
So it's interesting because I think we talked about this pre-merger. We've talked about this during the merger process, and now we're talking about it post-merger. no park during a merger is going to come out and say, we can hardly wait to get our hands on these parks so we can sell them. That is not a good marketing stance. So no one is going to say that. No company is going to say that. I think that, in this particular case, they kind of, well, to a certain extent, I don't want to say bought the competition, but they merged with the competition, and now they can weed out what they don't want. And this is the way mergers work. Now, from a fan base side, everybody wants everything all the time. And unfortunately, that's just not good business sense. So unless things are a charity and being run by a government that pays for everything in taxes or whatever, you can't get everything you want all the time. So, yes, I would love to see, and I knew this was going to happen, I would love to see all of the parks in the current Six Flags portfolio be elevated to the level. But as you said, Philip, where's the money coming from? Mm-hmm. Where does the money come from here? So if they can take, the two behemoths of companies that is now one bigger behemoth of companies, it's really too big to manage, I think. And I think it's, especially because it's just all of a sudden happened, it's not like they grew slowly over time. It was like, boom, now we're a giant company. And now they have to go through and sort out. It's sort of like when you go to an estate sale and you say, I'm going to buy everything in the house, and you decide, okay, I'm going to keep this piece, I'm going to keep this piece, I'm going to keep this piece, everything else I'm going to sell to help pay for the fact that I just bought this entire lot of crap. So I'm not saying that Six Flags is a lot of crap. Don't misunderstand me. But I think that it's important to kind of sort through your assets now, figure out what is performing, how can you make the best. And my guess is this was the plan all along, but they're never going to lead with this. They're never going to say, yes, we're going to merge these two so we can sell off some of these parks and make the other ones great. They're not going to be transparent about that. Nor should they, really. That's horrible marketing. Hey, approve this sale so we can get rid of the park that's in your hometown.
That's right.
Come on. That's not going to happen.
Well, and if you look at the trajectory, I think you're right. They were never going to say that, but it does make a lot of sense because they got all that great press about the merger, being able to cite the huge amount of parks they have now. Mm-hmm. So they got all the benefit of having the numbers and all that. And then they got to do that huge sale, trying to sell access to all these, unprecedented number of parks all throughout the country. And now they can say, okay, and now they had another Halloween season. So they got to look at, where Halloween was performing well at what parks. And now they're going to Christmas seasons. So they can look at how well seasonal events are performing at the different parks, and they can trim them, because I think they are going to need to. And I don't know, to me, the only clear things here is that there are some clear parks I think they're going to keep. And I think in our comments from the previous weeks, I think everybody who has said in our shows that they have noticed that their parks are looking better, those are probably going to be the ones that get, like Six Flags over Texas. They're probably going to keep that. They're the places they put the Conjuring, that
Six Flags,
Conjuring
Six Flags
did so
Great
well.
America. Six Flags Great America is looking better than it's ever looked before.
Yep.
We were just there not too long ago, and so it's. And to be completely transparent, I wouldn't be too surprised if this was a ploy by the company to get the individual parks to get in line and get their poop together, because it's time to put up or shut up. So just simply by saying some of these parks are not going to be around next year, the first thing the local administration for these parks is going to do is, well, we can't be one of the ones that's cut. We've got to make sure that we're doing everything we can to fit within the company guidelines, the new company guidelines, if it was a Cedar Fair park, or the new company guidelines, even if it was a Six Flags park, because things have changed on both sides. So they got to make sure that they make their numbers. And I think that, it's just good business, people. They can, I think, and I don't have the stats to back this up, but I would venture to say that they can do a little bit more culling. They can get a little bit more capital funding by selling off some parks. They can, and still have more individual locations than any other operator in the U.S.
Yeah, I think they could do a lot of culling. I was having a conversation about this with somebody else, another journalist, in that when this first came out on this, after this call, and I was like, I think there's like 15. I think they could trim it down to like 15. They look at me like I'm crazy, and I'm like,
well, but I mean, if you think about it, you take, I don't know how many parks they have currently. After the most recent closures, but if you reduce the number of parks you have by 15%,
yep,
20%, and you take that money, you use it to pay off debt, you use it to move forward with capital investment in the remaining parks. Yes, some of the local parks get a little bit lost in the shuffle, but what it will do is elevate the other 80 to 90% of the parks that are in the portfolio.
Yeah.
And to me, that is good not only for business, but also for the theme park goer. You know what I'm saying?
Yeah. Well, I think it's good for them because in a way it's not sustainable in the way that it is now. Like, I think I think maybe some of the locations are sustainable, but like having this many all operating, trying to do this, it's just not sustainable. And I think that's part of it too. And so we got a lot of comments too in the last Six Flags one about the state of the economy and that kind of thing. I think that's part of this too. It's like, it's a weird thing to say, but it's like, if they're able to invest in the parks, that means the parks are a better value, which means it actually is worth it when a family purchases the tickets to attend to them, because it's a better overall value. And I think that's there. I think that's a pretty strong argument. And but maybe we should tie in the next story here. So this economic uncertainty is something that also came up in some of the other earnings reports, including from United Parks and Resorts. So they had their earnings call on November 6th. And during that call, they reported a 25% drop in Q3 profit, with attendance down 3.4% to 6.8 million visitors. CEO Mark Swanson observed that we are obviously not happy with the results we delivered in the quarter. You're just like, okay, thanks, Mark. So
I'm sorry. I find that refreshing though, because all too often these CEOs will come out and say, "Yes, our profit margin is down 25%, but everything's fine."
Yeah. Oh my
God.
You're
How
right.
is that possible? And meanwhile, the stockholders are going, "What the hell's going on here? Let me call somebody."
Yeah. And of course, they cited bad weather as a factor, which is like, we really do need a sting for that whenever a company cites bad weather, but blames weather. So they blamed bad weather on 4th of July and Labor Day holidays, as well as a decline in international visitors by 90,000 guests as reasons for lower attendance. They said that the Howl-O-Scream at SeaWorld Orlando and SeaWorld San Diego had record attendance, though, as well as Discovery Cove, its Orlando Day resort park. And another quote here from Mark says, the consumer environment in the U.S. appears to be inconsistent and has been outlined by a number of other leisure and hospitality businesses. Nonetheless, we can expect to do better. We can and expect to do better. We've got to continue to break through on the awareness and why you should have a ticket or a pass to our park. So basically, they're saying it's a marketing problem, which I'm not sure it is a marketing problem, but that's kind of what his plan is. Just we just need to better communicate our value. I don't know. It's interesting that Howl-O-Scream did well, but notice it's only in the Orlando and San Diego markets, and SeaWorld San Diego is small. And so that's one of those tricks, right? That's one of those tricks, the perception tricks, right? Where they're like, SeaWorld San Diego had a great year. You're like, well, that's also a tiny park that has tiny event.
SeaWorld San Diego, I don't. This is completely anecdotal, but a great year for Howl-O-Scream at SeaWorld San Diego is probably a fine year for SeaWorld in Tampa, but not a.
That's right.
So because again, it's such a much larger event. Now I will say. Again, I always have to say it, full transparency, worked for the company for 21 years. I am not sharing any information because the whole company has changed completely since I was there. I do still do some freelance work with the SeaWorld parks. I have in the past and hope to again in the future. But I will say that, when they talk about Howl-O-Scream in Orlando and in San Diego, I think part of the reason that they bring those to the surface is because those are very key markets for them.
And
Williamsburg, San
new events.
Antonio.
Yeah.
Sorry?
And new events too. The SeaWorld San Diego and Orlando are relatively new for the Howl-O-Scream brand.
Yes, but like I said, they're also very high profile markets. So they don't talk about Texas, they don't talk about Tampa, and that hasn't really changed. I actually do think it's a marketing challenge. I think that the park itself is curiously lacking in clear brand, and the reason that they can cite things like Howl-O-Scream, which of course I'm very biased towards, the reason they can cite things like Howl-O-Scream as successes is because Howl-O-Scream has a very clear brand message.
Mm-hmm.
And the day parks, the daytime products are a little wishy-washy. Are you going for roller coasters? Are you going for animal encounters? Are you going, what is it that makes the park? What is it that makes the brand? And this is something that I know for a fact, Busch Gardens has been fighting with for many, many years to figure out exactly what the brand is. And just keeping in mind, brand is not what they say they are. Brand is what the guests say they are. So we've even gone through things as ridiculous at Busch Gardens. We went through things, and this is all old news, so I'm not telling tales out of school. We even went through challenges of, well, it's just a gardens. There's nothing to do other than look at plants. So even the name is a dilemma for some guests. But that proves that the marketing is not clear. It's not clear to let guests know what these parks have to offer. And I will be completely transparent. I had not gone back. I have not gone back to Howl-O-Scream on a regular basis since I left the parks because I could only see what wasn't there. I couldn't see what was. And I think that's an unfair evaluation of the product. But I went back this year, and the quality in Tampa was elevated significantly, and that team has really worked their butts off to make it happen. So I think that when they mention these Howl-O-Scream success stories, whether they mention the specific park, specifically the Tampa park or not, these Halloween success stories show that Halloween has a clear brand. Howl-O-Scream, you know what you're getting. Guests react to that, respond to that, and spend money on it. So, going back to the days when Howl-O-Scream was the redheaded stepchild of the Busch Gardens company across the board, and now it is the thing that they are leading with. It's the point of the arrow to their success. To me, shows that the day brand has some challenges, and they can we should all expect them to do better, as the quote says, as far as clarifying what that brand message is and what guests can experience in the parks. Because to be honest, the parks are great. The parks have a lot of great bones. There's some operational challenges. I think that's reactionary to the 25% drop that we're talking about here. They're going, oh my gosh, we've got to close half the roller coasters. So that's an issue.
I think your point might be also bolstered by the other thing they mentioned here, which was the Discovery Cove. If only in that Discovery Cove also has a stronger brand. It's like you're going to Discovery Cove for not Halloween and for not roller coasters. Like it's more on that Discovery side of things. I guess the only, and I don't know enough about these, you've worked there. I don't even go to these at all. I guess my only question, and having followed all this since we've been recording the show, is just like, is this a marketing problem or is it a leadership problem? In that they did not they didn't set a North Star like this is what the parks are going to be and this is how we're going to differentiate them. And then they followed the capital that follows according to that plan. And it's like, I can't help but wonder if you had done that, then would that have solved the marketing problem, because it would be clear what the park is for. I don't know. That's just my only observation.
No, that's a very good observation. I can't answer that question one way or the other because I don't really know for sure. I think, and I may be saying the same thing here. I would say that they have a brand problem.
Yeah.
I don't know whether it's a leadership problem or a marketing problem. To me, it's a brand problem. When you think of Universal, you have some very specific action words that come to mind immediately. When you think of Disney, you have some very clear action words that come to mind immediately. When you think of Busch Gardens or SeaWorld, you either think of Shamu, which they're pulling away from now, or Busch Gardens. People don't quite know what to think. And Busch Gardens Williamsburg versus Busch Gardens Tampa, very different.
Yep.
So I think that there needs to be a clarification of brand messaging. That would be my suggestion. And again, I'm playing armchair quarterback here, but it sounds to me as though they're having trouble actually, and it's nothing new. The parks have done this for years, having trouble communicating exactly why you should come to their park and what they have to offer that nobody else has to offer. What is the point of differentiation in the market? And it used to be in Tampa, it used to be that it was, theme parks and animals, but that's not a differentiation in the market anymore. There are other parks that do that. So it's one of those, why should I go there?
Yeah.
And I don't think they've answered that question yet.
That's right. I think we are saying almost the same thing. Yeah. I think I would just say I'm thinking of it more as like where you allocate your capital and your resources should follow that. I guess reading the stuff about the call, it felt like he was saying all we're going to do is just change our marketing, like change our copy, right? Our website copy. And I'm like, but if you don't do what you just said, if you don't set your brand, set your differentiation, set your strategy, set your North Star, and then have your capital and your team and your leadership and everything follow that, then it just changing the copy is not going to matter, because you're going to change the copy and the guests are going to show up and it's still not going to work, because they're going to be like, okay, well, they're going to disagree with you.
And I don't want people to think that these parks are not worth attending. They are worth attending. There's some great elements to these parks, and there are some very good reasons to go to them. I just don't think that's being communicated well.
Yeah.
And I don't think it's being communicated in a simple way. So, I agree with you in the fact that the best marketing for a park is a good park. So I think there is some cleanup that can be done there. But I also think that the park has some really cool, and again, I know Tampa better than the other parks, but that's probably not true. I know I've worked at all the SeaWorlds, but I think that, they've all got elements that are really appealing. They've got, it's like when you're buying a house, it's got good bones. They've got a lot of good elements that could be something very special. I just don't think they've figured out a way to communicate with guests in a simple and direct way. Here's why you should come to our parks. And part of the challenge is that the Busch Gardens parks, Sesame Place, the SeaWorld parks, the water parks all have such vastly different branding messages that they can't tie them all together. And even Busch Gardens Tampa and Busch Gardens Williamsburg, completely different experiences, even though they share even some of the same rides.
Yep.
So I think they need to find a way, just kind of building off of their statements, if it is true that their marketing is not letting people know what to expect or giving them anything that they have to see, then they have to find a way to unify and get everybody enthusiastic about the overall brand again. This ties to the Six Flags story too.
That's true.
Getting under the Six Flags banner as opposed to Cedar Fair, which people didn't really know. The average guest did not know what Cedar Fair was.
Yep.
They had heard of Cedar Point, but they didn't know that Cedar Fair owned all these parks.
Yep.
getting under the Six Flags banner made total sense from a long-term marketing strategy plan standpoint, I think.
Yep.
So the what's it called now? Universal Parks and Entertainment, United Parks and Entertainment. Sorry, not Universal.
Yeah.
United Parks and Entertainment. They need to figure out what is that banner and how can they all rally behind the same one.
That's true. It's an interesting thought exercise to think about it that way, where you think like if you shuffled it all around, right? Like if you were to just go into a Busch Gardens or a SeaWorld, or I mean, would you know, right? Yeah, if you were a consumer that's not like us, who doesn't have any idea, because there are still plenty of people who have no idea that Knott's is owned by Six Flags, right? There's still, I mean, you still don't have
and
that.
They have no idea that Busch Gardens and SeaWorld are owned by the same company.
That's right. That's right. Yeah. So it's interesting because you're like, if you were to just completely wipe your perceptions and think like, how would you know if this park were owned by which chain? Yeah, that's an interesting thought experiment. Where like what could you really point to that would say, well, this is how you would prove it? Because I think to your point, you always recognize a Disney park and you pretty much always recognize Universal Park, but the rest of them could be whatever. I mean, really, yeah, that's interesting. Well, let's see what else here. We also have going down the same theme, I think, is Disneyland is laying off 100 of their full-time cast members. And in a statement, they said to Deadline that with our business in a period of steady, sustained operation, we are recalibrating our organization to ensure we continue to deliver exceptional experiences for our guests while positioning Disneyland Resort for the future. As part of this, we've made the difficult decision to eliminate a number of salaried positions. We are deeply grateful for the contributions and we're going to support them, et cetera, et cetera. I know some of these cuts, they weren't specific, but we know a lot of them did come from entertainment because at least I've in my space have been seeing the entertainers about it afterwards. It's interesting. This does kind of dovetail with what United Parks said in theirs, about that. Although Disney spun it to be more like right sizing than the United Parks one, which spun it to be more like economic uncertainty.
We have to save our butts. Yeah.
Right. But I don't know.
Disney wasn't down 25% either. So,
That's true. And so that's exactly what I was thinking when I read this. I was like, well, despite that, the Disney parks are doing the best by far, as we talked about in the last report, like they're doing the best of anybody by leaps and bounds, right? And yes, the North America ones aren't doing as well, but they're still doing, compared to everybody else, they're doing fine, and the demand is still there. I mean, you go to parks and they're packed. So I think the question is that if Disney is doing so well and they're still cutting 100 people. What is it going to look like for United Parks and for Six Flags when they are not doing nearly as well as Disney? And how are they going to navigate? And so I guess Six Flags' answer is we're going to close a bunch of parks and maybe use that money to redistribute it. But what is United Parks going to do?
Well, and let's put this into perspective here. When Disneyland Resort says they're going to lay off 100 in their organizational staff,
Yep.
Disney has always been cast member heavy.
Yep.
To provide the level of service and the quality of service that Disney has always claimed that they wanted to provide. So if you were to cut 100 salaried staff members from some of the United Parks, there would be no salaried staff members. So you have to put this into perspective. Disney is, I think they truly are right sizing, quite honestly. I think they truly are looking at it going, okay, because the pendulum is always going to swing back and forth. It's got to be reactive to the economy. It's got to be reactive to how the parks are doing financially. There is no, here's how we're going to run business and we're always going to do it exactly the same way because that's how businesses end up closing. So they have to be reactive in some way. Going back to, what we were talking about, the closing of the Six Flags parks, they wouldn't necessarily have to close parks if they could reduce their entire labor force by 25%.
Yeah.
That's not going to work because a park's going to suck when
Yeah.
you go to it. So
Well, they already did 10% reductions, right? And so, yeah, even with the 10% reductions, it's still a lot. I guess, yeah, it's just interesting to look at the different approaches because Six Flags, at least to your point, they're saying like, hey, we're cutting these. Like, I mean, at least they're painting it. United Parks is owning up to it, but where's the plan? Like, are they going to close the park? Are they going to sell something? Or are they going to, I mean, Halloween's over. So what? Okay. I'm glad Howl-O-Scream did well, but it's not going to help you in the rest of the quarters, or especially the hard quarter, which is Q1, right? I mean,
Right.
and then if there is economic uncertainty, what are you doing about it? So I don't know. Yeah, interesting.
Well, it's basically, it's three basic approaches that we've talked about. We've talked about cutting parks from the portfolio.
Yep.
Making sure that we can communicate what our parks have to offer in a way that is resonating with them, or we're going to reduce our staff in order to adjust. I don't think that a layoff of 100 people, and again, my heart goes out to those 100 people,
Yep.
but I don't think the layoff of 100 people at the Disneyland Resort is that drastic a cut. I don't know what their employees, the number of employees are, and when they say they're laying off these, what are they, full-time? Did they say full-time or salaried?
Full-time cast. Yeah.
Yeah. So then they'll bring them back as part-time, and it looks great on the books. I've seen this happen in parks time and time again.
Yeah. Yeah.
So, three different approaches, three different basic parks, and all of them are kind of reacting to the same thing, and that is what we talked about weeks ago, that the giant parks are going to struggle because the pendulum is shifting to the pop-ups, which is why Howl-O-Scream and the boutique park are the ones that are still making money for United Parks. And we all know that Disney will celebrate anything, so they have all of these pop-up reasons for people to return.
It's true. Christmas is coming. Yeah.
So that's it's unique to see how three different companies are handling the same economic situation in the world, and hopefully we can even this out just a little bit. We'll see. I'm curious because IAPA opens up very shortly, and I'm very curious to see what the mood is, what the vibe is at IAPA, and of course we will be. We're going to do a pre-IAPA show, and then we will do a post-IAPA show as well. So we will talk about what we're hearing and then what we actually heard. So cool. But we are way over time. So on behalf of Philip and myself, this is Green Tag Theme Park in 30. Thank you all so much for listening. If you are not a member of the Patreon show, please become a part of Unhinged, because we're going to carry this conversation and explode it on there. And that way we can kind of throw our gloves off. And if you are watching us, please like and subscribe. I know that sounds so...
please subscribe.
So
we actually really need subscribers.
Yeah, please subscribe.
Actually, no matter where you are listening to this, please just go to YouTube and subscribe. You don't have to watch it on YouTube, but we actually qualify to get monetized on YouTube except for the subscribers number, which I've never had happen because that's a lot of watch time. And usually it's the reverse for me. But so yes, even if you don't watch it, please just go and get us.
I think we're just going to change the name of the show to Subscribe. So until next week, on behalf of Philip and myself, this is Scott for Subscribe, and we'll see you next week.